we had a conversation with the Director of Research at IMF, Pierre-Olivier Gourinchas. Here's what he had to say.
We see headline inflation coming down already. So headline inflation includes everything that's in the consumer basket. And it's coming down because energy prices have been coming down from their very high levels that they reached last year. So that's good news. But that's not sufficient. And that's a sense in which inflation has proven more persistent than we anticipated. And so this is where, having a monetary policy that is sufficiently tight, that will reduce spending, cool off economic activity just enough that these price pressures will eventually disappear and it will bring back inflation to their target is absolutely essential. For the US is that the US economy will slow down this year in 2023 and next year we have a projection of about 1.6% growth in 23 and then 1.1% in 2024. Now the US economy has been very resilient so far. Despite this very substantial increase in interest rates by the Federal Reserve, labor markets are very, very tight. The unemployment rate is very low, 3.5%. Businesses are trying to hire workers, the large number of vacancies. So the economy has been very, very resilient. That's good news, but at the same time it suggests that, maybe inflation will not come down as quickly as one would want, and maybe more tightening will be needed. Now in our projection, with this slowdown I described, 1.6%, 1.1%, this would be associated with a softening of the labor market. Unemployment rate in our projections in the US would increase to about 4.9% in 2024. Again, starting from a very low level, 4.9% is higher, but it's not a very high unemployment rate. So there is a narrow path for the US to avoid a recession as it sort of slows down its economy. But of course, the risks have increased, and the problem with the financial instability that might occur is that it creates a lot of volatility, a lot of risk, and it's possible that the US economy could experience a recession in the coming years. The IMF does a lot of things on climate change. As you know, our managing director is very focused on trying to find ways in which we can help. And sometimes people say, well, the IMF, the International Monetary Fund, our mandate is to help countries that are balance of payments problems. What does it have to do with climate change? Well, it has a lot to do with climate change. So a lot of countries need to do investment in climate mitigation, climate adaptation. They need to prepare, they need to green their economy. This requires investment. This requires external funding. Therefore, there is a role for the IMF to be there and to support these countries when they're doing this. And we're doing this both in terms of helping countries develop their own tools to identify what they need to do in terms of climate transition. But also we have new lending instruments that we've instituted last year, the Resilience and Sustainability Trust, which allows countries to get funding from us on a longer term perspective, not just 3 years, but up to 10 years, to deal with issues that are directly related to climate change. So we are trying to do as much as we can within our mandate, of course. The good news is that China's growth this year is really very strong. We are projecting 5.2%, which is even slightly higher than what the government itself is projecting at 5%. And that's really entirely driven by the reopening of the Chinese economy. Now, we have some concerns about growth prospects for the Chinese economy when we look further out. And for instance, for 2024, we already expect growth to be coming back down to 4.5%, below 5%. And then when we extend 4 or 5 years out, we also worry that growth rate of the Chinese economy might not be what it used to be. So there are concerns about productivity growth. Population is already decreasing in China, so population growth is also an issue when you want to think about the overall size of economic growth. So there are a number of more medium-term and long-term challenges that the Chinese economy is going to be facing, but it's in a good position right now.